My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to this West Coast edition of Mad Money. Welcome to Cramerica. I'll be with my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. At the end of a week that was totally defined by the Fed, we finally got a respite from the Fed chatter today. Even when it's positive, there's only so much I can handle before I need a break. Without the interest speculation, the averages took a breather too. With the Dow advancing 38 points, S&P dipping 0.19%, NASDAQ declining 0.36%. But going forward, we're still very much in the hands of the Federal Reserve. When Fed officials talk, the market's going to listen. And it should listen. I've just been through these cycles so many times that I wish they left all the public communication to Jay Powell. Sometimes it feels like the Federal Market Committee is a little too small D, so to speak, okay? That means Democratic. I'm not saying Chairman Powell should take a page from Chairman Mao. But when it comes to free speech for regional Fed presidents, maybe they should just keep their mouths shut. All right, we got a lot of stuff here in mind for the next week's game plan because you'll quickly see what I mean. On Monday, the Fed speakers resume their dominance over the stock market media cycle, even as we'll wish they didn't once we parse the words of Raphael Bostic, the president of the Atlanta Fed, Austin Goolsbee, the president of the Chicago Fed. They'll explain why the Fed blessed us with a 50 basis point double rate cut, not the mere 25 basis points that most of us were expecting until last week. You know me, I think this whole game is a sideshow. It's a sideshow that freezes you from buying the stocks of terrific companies when their stocks are down. Of course, the main event on Monday will be the initial tally of how many iPhone 16s Apple managed to sell over the weekend. I know this is a tawdry game where invariably we're given more reasons to sell the stock of Apple than buy it. All I can say is that's how nearly all these iPhone launches have played out, both the good and the bad. So please, don't let this interim data sucker you out of your position. Again, own Apple, don't trade it. We're also going to hear more about this possible acquisition of Intel by Qualcomm. Now, this would be an odd couple, as Qualcomm historically hasn't liked the foundry business, and Intel is all in foundries. Maybe that's why Intel is trying to separate out foundries from the pastiche of businesses it owns in the last financial statements I saw. I don't know. We'll certainly learn more. But I've got to tell you, let's just say suspicious. How about that? The most intractable part of the now waning inflationary economy is housing. We lost two different streams of home sales in the last few years. The stream of people who want to move up but can't because they'll lose that low-rate mortgage, and the stream of new homes, which is slowed to a trickle because home builders are reluctant to build anything when rates are so high. I don't blame them. On Tuesday, though, KB Homes reports, and I hope they'll help us understand where we are in the housing cycle, because now that the Fed's cutting rates, you better believe that KB's 2025 should be a heck of a lot better than 2024. Mortgage rates down, more sales. Tuesday's also the day where HP Inc. shows some big institutions how their products lineups being re-engineered by AI. In that sense, I've seen the future myself because we went to HP headquarters today. We're going to give you a sneak peek preview. You're not going to believe what you're going to see. It's tough to get a handle on small business. You can dial up payroll numbers from Paychecks. We like those. But you can also listen to the quarterly conference call from a company called Cintas on Wednesday, which delivers all sorts of things to the regular workplace, including uniforms. The stock's been remarkable, both because we've had surprisingly strong small business formation over the past 5 years, yes, even during COVID, and also probably because they keep taking share. Cintas does it better than anyone else. They're pure joy when they come on the show. After the close, we're going to test out a theory of mine about Micron. This company makes all sorts of basic memory chips going to everything. Also has high bandwidth chips that are used in data centers. But its stock has been crushed lately. In fact, it's been annihilated to the point where it might actually be a buy, no matter what the critics have to say about the quarter. I am looking for balance, even as this market has gotten incredibly overbought. Thursday's pretty straightforward. Costco, Core Charitable Trust Holding, reports, and they're going to give us an update on what's selling and what isn't. The stock itself has been amazing. I think it continues to be amazing, which is why I've been telling the CNBC Investing Club, hold on. As much as I want to take a break from the Fed talk, Friday won't provide that because we get the inflation data that the Fed supposedly relies on the most. The series of numbers patched together, including the personal consumption expenditures indices. They'll trigger a whole new guessing game about how many rate cuts we're going to get this fall and by how much. And that is if we get any additional rate cuts at all. I've got to tell you, again, I don't think anybody knows. Just focus on good companies and good stocks, and you won't go wrong. Here's the bottom line. No matter what happens next week, I want to remind you that we're in a late we're in a rate cut cycle now. Okay, it's very different from the last couple of years. So the backdrop is now friendly. Don't treat it with hostility, please, even if it is overbought by any means. When the Fed wants to be your friend, the best way to try to make money is embracing the Fed's friendship. Let's take calls. Let's go to Miles in Louisiana. Miles.
Jim, got the Birds coming to town this weekend. That Superdome's going to be rocking.
I think that my team right now is I'm from Philadelphia, so I'll support my team. Let's leave it at that. What's going on?
Yes, sir. Just want to get your thoughts on Chevron. With rates coming down, the dollar presumably getting weaker, and a potential Harris administration with less oil coming on the market. What do you think about Chevron?
I think that the oils are a tough place to be. The fact that oil prices haven't gone up, even though there's so many shorts in oil, has surprised me. You're not going to go wrong owning a stock that says a 4.5% yield that buys back a lot of stock with Chevron. But be prepared. I don't think it's going to be the rocket that it was when it first went from, say, 100 all the way up to 171. I don't see that happening again. Anyway, I want you to remember that we're now in a rate-cutting cycle. So the backdrop for this market is friendly. Please don't treat it with hostility. You're going to miss a lot of opportunities if you do. Oh, man, Money Tony, how is AI powering up a new wave of PCs? I'm learning more with HP CEO ahead of the company's innovation-focused event next week. Then, after soaring on earnings, is RH sitting on a strong foundation, maybe even a gold mine? I'm talking to the top brass to see if this home-centric retailer can keep building higher. Plus, don't miss my check-in with the CEO of Okta. That could be a coil spring. We got to hear about what they have to say about cybersecurity and identity, of which they are the dominant player. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.